Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, October 30th, 2020. As always, please hit the like button, subscribe to this channel, and share this video with others. Stocks are threatening to break below September lows. We'll look at some of the good levels to be watching out to be buying the stocks, such as S&P and NASDAQ. Dow Jones already broke below September lows. However, small caps have not yet, so we'll see if it actually makes any difference. We'll look at bonds in a little bit more detail this week because I'm seeing that Treasury yield, 30-year Treasury yield is approaching breakout level, and so the bond prices are dropping. And we'll look at municipal bonds that kind of look a little scary, so I'll show you what I mean. And same goes for junk bonds. They are still holding up value, so this is good for stocks. Dollar rally continues, and this is weighing on all kinds of commodities and precious metals especially, while Bitcoin is doing quite well and is making another 52-week highs, and we'll finish up with Ethereum. Alright, so as always, I'm going to be using my indicators, the trading indicators that you can see on this chart, the green, blue, red, and yellow lines. You can find out more about them by going to MasterChartsTrading.com. You can also go to everyonecantrade.com and you'll get to the same place. So I have 3 different products. I have a newsletter where you can get all kinds of cool alerts about stocks and ETFs that I trade, trading indicators, and we have the ultimate bundle, which also includes the stock screener and the new stock speculator newsletter. So what are these indicators? Why do I use them? Basically, these are support and resistance. Now, to people who are not normally trading, the support and resistance makes very little sense. So, for those who are not trading, have never traded before, that's fine. What you need to do is, you need to understand is that there are levels, price levels for each security, and on each time frame. Very interesting. So you can see daily, whatever minutes, but in this case we're going to be looking at daily charts. So D for daily, meaning that each candlestick represents 1 day's worth of activity. People do not get that, and if you don't get it, please let me know. Now, so on daily charts, we're looking at S&P 500 futures here. First of all-time record highs were set on September 2nd, so unequivocally bullish chart. However, recently we were trying to make a high here on the 12th of October, but it didn't happen, and then we got selling. It's clearly visible in the 4-hour chart, so let me go to 4-hour charts so that I'll show you what I mean. So on the 4-hour charts, yes, you can trade continuous instruments. So again, people need to understand what continuous means. So S&P 500 futures, for example, is a continuous instrument, while, for example, SPY, S&P 500 ETF SPY, is not, because you can see the opening and closing gaps on the 4-hour charts or on the 1-hour charts, whatever. Here's 1-hour chart of S&P 500 ETF SPY, and you can see gaps. Now, on futures, you cannot see those gaps because it's a continuous trading, except for a weekend period. But for all practical purposes, it is a continuous trading. So on the 4-hour charts, you can see a clear breakdown right there where I'm hovering below support, and a collapse lower. So this is currently on the 4-hour chart a bearish security. In other words, if I was to trade it, I would be looking for an opportunity, for a bounce towards the red line, and then I would be shorting it. In fact, I'm going to turn on my cool offset into the future. So you can see my indicators. You can see the 2.0 version. The 4.0 version is not out yet, but I'm just previewing it out. So it's basically offset into the future. And you can see the future levels. So what I'm watching for is this level at 3326 on the 4-hour chart. And what I'm thinking is we're going to get something like, a bounce of some sort towards the 4-hour charts, and probably we're going to see shorts come in. Notice that also this is on November 3rd, when the elections are coming. So we can see fireworks, obviously. But as of right now, short-term charts are showing resistance. In other words, if we see a bounce, the short sellers should come in and start selling. Hasn't happened yet, obviously, but this is what I'm thinking is going to happen in the very near term. However, if we look on the daily charts, we can clearly see that we're still in an uptrend. So an uptrend began with a breakout above the blue line. Again, these lines are not just made up, they're mathematically calculated. So we can see new lows back in March, and then finally a breakout right here on April. And since then we're just buying, we're looking for buying opportunities, and best buying opportunities, as you can see, I put here excellent buying opportunity, excellent buying level at the blue line. So the blue line currently is around 3057, but let's just make it 3000. So I think we could easily drop to around 3000, which is another 8% for the S&P 500, and it would be still an excellent buying opportunity. In fact, I will be buying myself once the bottoming pattern is in. So we need to see a bottoming pattern, for example, similar to what we saw here in June. You can see a drop towards the blue line, touch of the blue line right there on the 15th of June, and then a rally. So I'm looking for something of similar nature. And opposite is also entirely possible. So we could see potentially like something happens here, maybe a little bit of trading around the blue line, but then it could collapse lower. So we need to keep our minds open to many possibilities. But for now, I'm not really terribly worried about this chart. I still think we're definitely in an uptrend. And for a bear market to begin, we need to get all the way down to the yellow line, which is at 26% down from today's levels. So unlikely, in the near term, but not impossible. We could see a collapse. However, with the Federal Reserve and the European central banks basically printing money, we can see what I was predicting, a bottoming pattern around 3000 and then a new high. I don't really look at economic picture, fundamental economic picture, and some people are saying that the stocks are overvalued. But we've seen, price to earnings ratios just go through the roof, and some companies have negative price to earnings ratio. In other words, they're losing money, and yet their stock is going up. So the fundamental analysis is, well, it's not terribly useful in my opinion, because without fundamental analysis, I can do the same thing and much easier and quicker. I can just give you the levels where to buy. So yes, you can look at fundamentals, you can look at the way money is spent, velocity of money, God knows what else, opinions of economists that are wearing a suit and ties on TV. But in fact, you can do the same thing with my indicators. You can just look at the levels and predict, okay, I'm gonna say that the stock will drop towards the blue line, and then I will be buying it there. For NASDAQ, so NASDAQ QQQ, just a tremendous run. This was from April 14, big run. We had 40% run, over 40% run. So we're definitely entitled to a pullback. And again, if we see a pullback unfold even further towards the blue line, which is currently at 251, this would become a great buying opportunity once again. But once again, we need to wait for a bottoming pattern. We can't just set a limit buy and forget about it, because what if it collapses through and continues lower? So I want to see at least a touch of the blue line and then a close above it. So for me, this is the signal: a touch of the blue line and then a close above it. For now, we're just gonna sit and wait and do nothing. I mean, if you have your position from back here, from April, that's I would still be holding it. I would actually be trailing at the blue line, and if it closes below, then I will exit, and then I will consider re-entering once the bottoming pattern was set in, was put in rather. For now, we just wait. Basically, we're waiting. The Dow Jones, so multiple opportunities. These are actual alerts to my subscribers at MasterChartsTrading.com. Right now, we can see that the Dow Jones actually broke below September lows. So in that sense, Dow Jones is leading to the downside. It could mean something, or it could mean nothing. Compared to small caps, IWM, for example, you can see that the small caps have a little bit of a different pattern. You can see the low here in September is still below the current price, while for Dow Jones, the low in September is already above the current price. Maybe this is like a head and shoulder or inverted cup. So yes, if it is, then we can expect a move of another 9% down, something of this nature. So that would put the price of Dow Jones somewhere in the vicinity of 239 for DIA, or we can look at Dow Jones itself. So that would be, let me see, that would put Dow Jones somewhere in the 2400 area. It's not impossible, but at that point it will be definitely oversold, and we definitely want to be looking for an opportunity to buy. And the way to have that opportunity is, like, for example, here from the 8th of June to the 15th of June, you can see a drop. Actually, it closed below the blue line and then rallied above it. So this is our buying signal right there. And this would have been a very nice profit already for you. So we're looking for something similar for Dow Jones as well. Small caps, like I said, are outperforming actually. And if you look at economical picture from the fundamental perspective, again, I don't really care much for it, but people do. But if you look from a fundamental perspective, this is actually a good sign where small caps are outperforming large caps, because it shows that domestic, small caps are doing quite well. Despite all of the talk about huge unemployment, and it's not untrue, there is really bad unemployment, there is really bad things happening due to virus. I urge everybody to at the very least wear a mask, and do not question that. Trust me, it definitely spreads through the air, the virus. So you can, argue about politics, but this is science, so we don't really have to argue about science. Well, you would think you don't have to argue about science, right? So, with that in mind, we can just say that, okay, small caps are doing okay, even better than the major indices. However, if the small caps do break down towards the blue line, this could be like a head and shoulders kind of business also. So that's, we could easily drop towards the red line. It's not impossible. But once again, we just need to look for a bottoming pattern and a close above the blue line. Once it's there, we can just buy. That would be the signal. Kind of similar what we had here back in May, in June. Looking at the junk bonds, so junk bonds and stocks, as I keep saying, the correlation, in other words, stocks and junk bonds, they kind of move together in lockstep. Here we can see a breakout back in April of this year, where after this collapse basically and panic, and the Federal Reserve stepped in, started buying junk bonds. They just started buying them outright. They actually bought this ETF. They hold this ETF. The Federal Reserve actually holds this ETF. We can also argue about the mandate of the Federal Reserve and do they even have the right to buy the junk bonds. But I guess they do, because nobody really objected. And I think the next step, if the things continue the way they are, Federal Reserve most likely will just start buying stocks, like they are doing in Japan already. So junk bonds and stocks again move together. They, generally speaking, move together in lockstep. And one thing that I'm seeing about this chart that's positive is that there's relatively muted reaction, so not a lot of movement compared to, let's say, S&P, whereas there's significant movement to the downside. The junk bonds didn't really move that much. They did move a little bit, and notice that today, of all the stocks and bonds, that many, especially stocks mostly ended up in the red, but junk bonds actually did okay. So let's see if this means anything. I'm watching the junk bonds for correct price action. Right now I'm actually holding about half of my position. I bought it back here on 22nd of May. Still holding it. It's from my retirement account, and I'm holding to see what happens. I mean, if it drops any more towards like 100, maybe 101 level, I'll just get stopped out. But I still have a profitable position. So important in trading is to at least have a profitable position, and then occasionally you will get just huge moves. So vast majority of the time you'll be like no loss, small gain, and then you'll have like a big win, and that overall it will pull your average up. So right now my average is actually the best I've ever had. So I make about $3 for each dollar for each dollar I lose. So my profit factor is close to 3 right now overall. So I'm extremely happy with it. You could improve it, I'm sure. One could improve it, I'm sure, but we're humans, so to improve this even further, I think will require maybe robotic assistance, artificial intelligence, which we are actually working on right now. And we have already 2 trading robots that trade in cryptocurrencies. So I'll get to them once I have more data, but it is happening, so stay tuned, I guess. So looking at this chart, junk bonds, they are, again, not anything big is happening right now. I will just, if I had, I have a position, so I'm just holding it. I'm just going to stay in it for a while. Now, interesting things are happening in the municipal bond market. To show this pattern more clearly, I need to turn off my indicators. So I'm going to turn off my indicators for a few seconds, and it will be just pretty clear. So many traders use this various chart patterns like head and shoulders or flag or falling wedge or whatever, pennants. And I used to kind of try to figure them out, and then eventually just gave up because it's really difficult to confirm or deny. And even really professional traders, they're like, well, yeah, it's a head and shoulders, but sometimes it doesn't work. So I don't really care about it that much, but this one just kind of jumped out at me. and it's pretty obvious, you know, this pattern. Maybe this is the head, maybe this is the right shoulder. So it does feel like we're breaking down, and I think municipal bonds could be next. However, if I turn on my indicators back, we can see that actually this head and shoulders in the context of a bigger picture is not that significant, because if it even drops towards the blue line, which would be, you know, a significant amount for municipal bonds, that's like 3% or so, that would be still a buying opportunity. And notice we had just wonderful opportunities, and you can see this is what I'm talking about, support and resistance. You see right there? I'm not making it up. So stock price drops towards the blue line, it bottoms out. This is a pattern I'm looking for. A low below the blue line where I'm hovering on April 24th for municipal bonds, and then a close above it actually the same day. So that's like a hammer candlestick. So this is an actual alert again, and then we have a nice gain afterwards. So this is what I mean by support and resistance. It's clearly visible, and this is why I like my indicators, because they help you clearly visualize the level where you should be interested. You know, up here, but the green line, I'm not terribly interested, because I don't want to be buying up here. You know, I want to be buying down where there's opportunity for it to go significantly higher. So I'm gonna be just waiting and seeing what's gonna happen. But it does look like it wants to break down. So this head and shoulders, if it's indeed head and shoulders, and once again, it's very difficult for many people, including myself. I don't really do it anymore. So there's the depth of head and shoulders, and there's the, you know, distance for the measured move. So we're looking at about 113.55. Let's see where it puts us. It most likely will continue lower if it breaks below that. So in my experience, usually they touch the blue line. So we're looking at even more drop afterwards. We're looking like 3.5%. Will it happen? Nobody really knows. But in order for, you know, successful trading, you have to have a system. And the system, my system, says that we need to be buying on close above the blue, put our stop at the yellow line. Once our target is reached, which is, you know, not that far, it's like there where I'm hovering, then we will advance our stop, and we will no longer be worrying about the trade. If that made any sense, let me know. If that didn't make sense, also make a comment. Right, moving on to treasuries, TLT. So I actually still have a position I bought on September 10th right there. It's not doing great. I thought it's just gonna go to new highs. Obviously it's not. Now it's like, now I can see resistance, if anything, right there where I'm hovering. 15th of October, 14th of October, price came up to the blue line from below, touched it, and then bounced off of it. So right now it's like in between, no man's land, sort of. We're looking between the blue and the red line. So if it gets to the red line, that could be problematic. So the reason for that is, if I look at the yield is the inverse of so 30-year treasury bond yield versus 20+ year treasury bond ETF. So we're looking basically at a mirror image of what I just showed, TLT versus TYX. TYX is a treasury bond yield. So treasury bond yield is approaching 1.84, and this would be like a breakout level. In other words, if it breaks out above it, that would imply TLT would most likely be by the red line by that time. And even though I have a stop currently at the yellow line, I would be quite reluctant to keep the position open if it breaks below the red line, because the yield would have by then broken out above the blue line. So this is the way people get confused, is that, yield and bond price, they move the opposite direction. However, the important thing here is that TLT represents a very conservative, very safe kind of investment, and looks like with all the Treasury and the Federal Reserve support, it's still dropping. So some things come to mind. Number one, it's possible that Treasury and Federal Reserve will just come out and start buying it again, in which case the prices should come up, and TYX, the Treasury bond yield, should move away from the blue line. We can go back a little bit and I'll just show you what I mean here. Notice how nicely it fits the pattern. You can see the breakdown of the yield was back in December 24th, 2018, so 2 years ago, and then from then on we just sell it short if you can trade TYX. And you can see it very nicely follows the patterns. Again, opportunity to short here December 19th and another move down. So in other words, TLT would have gone up, which is actually what I did as well. So opportunity again to short here on June 2020 of this year, also successful trade. Latest one would have been unsuccessful so far. On September 1st, I would have shorted it, maybe a little bit earlier in August here. And now we're approaching this breakout level. So looking at this chart, like once again, if we see a breakdown below the red line, most likely I will exit based on the Treasury bond yield, because by then it would have been above. It would be above the blue line, which is currently at 1.84%. So let's watch that level 1.84 and see what happens. Okay, switching gears towards more continuous securities. So DXY is a continuous security. Why do I say that? Because we can trade it on any time frame. For example, 1 minute. Yes, you can trade if you are able to trade contracts for difference, CFDs. So for example, here was an opportunity where I'm hovering. That's a 1 minute chart. Going back to 1 day chart, we can see that good opportunities were back in June and in July. So dollar index is still in a downtrend. However, it sure looks like it's bottoming here, at the very least temporarily. So right now, my thinking is we're still in a bear market for the dollar. And so this latest bounce from the 21st of October into today is still a bear market rally. In other words, it should be shorted. So now we're watching for a level which is at 95.96, so about 96 basically. If the price comes up there, then I would be more interested in selling it, in shorting it. So it will be something similar to what happened back on June 30th, right there where I'm hovering. So price went below the red line before, bounced towards it, and that's where we would have shorted it. And we would have been super correct, because notice this beautiful move lower. So now I'm wondering, is this what's going to happen? If we look a little bit more granular on the 4-hour charts, you can see that the failed breakdown here on the 20th October, and this is a 4-hour chart, so each candlestick is 4 hours worth of activity. So this breakdown really didn't go anywhere, and then afterwards we just saw a huge rally. But additionally, most important thing on this chart, this is a 4-hour chart again, right there where I'm hovering, 29th October, the 7 o'clock in the morning candlestick, you can see a breakout above the blue line. So what this means is that on this time frame, on a 4-hour time frame, the dollar is now in an uptrend. And this is a reversal, and it's not ideal to have, for example, 4-hour chart in an uptrend, but the daily chart in a downtrend. So if I really, was hell-bent on trading it, I would be like, Maybe I shouldn't. Maybe I just should wait. So for me, if we get up to 96 and have a top-in pattern, so something like here, again, high above the red, close below the red. That's the short signal for continuous securities. So quite a bit to run still to the upside. This is about 2%, and movements in dollar of this nature would be strongly reflected in other markets, for example commodities, but especially precious metals, which I'll get to in a second. Looking at oil, so oil, if we look on daily charts, it just not much is happening. So breakout originally occurred here back in May, 14th of May, where I'm hovering, and you got a nice gain. You should have been able to make tons of money here. More granularly on the 4-hour charts, we can see a breakdown. Now there were several whipsaws. In other words, for example, where I'm hovering on 8th of October, oil really tried to go higher, but didn't really go anywhere. And finally it kind of continued lower. And right there where I'm hovering, there was a close below the red line. So this is where I would have shorted it. Again, you need to trade oil futures. You could trade it using USO, or you can trade it using one of those inverse leveraged ETFs. It's not an ideal situation. You can use USO puts as well. Again, not an ideal situation, but if you're really interested in trading oil, then that's a way to do it, I think. Or you can, have a futures account, but you need a substantial capital to have a futures account. So many of my subscribers are not, they don't have a futures account, for the reason being is you need a significant amount of money. So they trade mostly at retail. I don't really care much about oil futures. I'm just letting you know that it is indeed possible to use my indicators to trade them, things like futures. So in this case, oil futures, this would have been a signal where I'm hovering on the 26th of October at 2 in the morning. You could have also gotten short, so anywhere probably till about 2200, till about 10 p.m. on the 27th of October. So, and then it just collapsed. So you can see the drop was quite significant. This is already close to 10% drop. Looking forward, we can again turn on my Nifty indicators, but they don't really show anything in the future because a new low was made. So looking into the future would be counterproductive right now. The best guess I can say is that we'll bounce towards 37.50, and then we'll see another wave of shorts. So looking at daily charts, you can barely see that, but looking at the 4-hour chart or smaller charts, you can see quite nicely. Dollar and gold are inversely related. Gold, you can see where I'm hovering, gold over US dollar. So if US dollar is getting stronger, this lower part of the equation is getting stronger, this currency pair, XAU over USD, will get pulled lower. Did that make any sense? Alright, if it didn't make sense, or if it did make sense, make a comment. Gold is approaching good levels. Gold, excellent levels at 1840. So I think I want to see a touch of the blue line. So something like here. Oh, this is a perfect example. Here back in March, we saw a low below the blue line. Even a few closes, it actually makes very little difference. I'm only looking for a low followed by a close. So a low happened on 13th of March, something else happened here, and then finally we closed above blue line, 23rd of March, and it just took off. So that's a 33% gain from the, actually a bit less, yeah, about 33% gain from the recent alert. So we're approaching similar setup. I want to see a low below the blue line followed by a close above it. But more importantly, I'm watching the action on the dollar. So if the dollar continues to strengthen, then gold may strongly weaken. And notice the bear market for gold again is not that far off, because this is a continuous security. You can my stop is at the red line. For non-continuous securities such as stocks, my stop is at the yellow line. This is how I express my bullish bias for stocks. Stocks have a bullish bias. In other words, they tend to go up. Gold, maybe, but not as much. It's a commodity. Oil, gold, silver, copper, natural gas. They're all commodities. So they trade more like oscillators. So they oscillate. They're either in a bear market or in a bull market. Well, it's the same with S&P, same with stocks. But I use the red and blue line to set my limits, set my bullish bias if it's above the blue line, and set my bearish bias if it's below the red line. And oil, or rather gold, it's not impossible. If dollar continues to strengthen, then we can see a bear market in gold again. Would dollar strengthen? Why would dollar strengthen if they're printing so much money? That is an economic question. This is more like a basic economy or fundamental point of view, and I try to avoid it as much as possible, again, because fundamental analysis difficult to trade on fundamentals. No, it's impossible to trade on fundamentals. You can invest for the long term, that you think that in 20 years gold will be higher, but it's difficult to trade on that. You can just put the money away and forget about it. If we're trying to get in and out of the position, we need specific prices, and this is what I'm trying to tell you, is that specific price is 1840 currently. If it bottoms there, if I see something of this nature, then we can say that we should be buying it. But if it continues lower and breaks below 1684, you can see the level 1684 right there for gold, then we could see another leg down for gold, and then potentially more legs down for gold. Not yet. So for now, I think that gold is in an uptrend, and I'm wishing for a good opportunity around 1840. If we look at silver, actually opportunity is already there. This was my entry SLV. I bought SLV here on 24th of September. It went a little bit higher, sold a quarter, advanced my stop to entry, and then next day I got stopped out, which in retrospect was a smart thing to do, because notice now the price is even lower. So I have no positions. This is actually already a trigger right there. So this is what I'm talking about. You need to see a low below the blue line and a close above it. And in this case, it was in the same day. Now, I haven't actually sent an alert to my subscribers just because of the way it's acting. And let's look at the 4-hour chart for silver. So here's silver on the 4-hour charts. Here unequivocally bearish. There's the breakdown where I'm hovering 21st of September at 9 in the 9 in the morning rather. And then we could have gotten short right there next day, or the next candlestick, and it's just sweet move. So anytime we touch the red line, we put our stop at the blue line above, and then we just wait for it to go. And there's the target already. So let's say you shorted it back on October 8th rather, right there where I'm hovering. Put your stop at the blue line, and there's your target. You could have made good money here already. So the way the indicators are curving currently, you can see they're curving down. In fact, I'm going to try to see if there is anything in the future of interest. And there's not much in the future of interest except for the level that is clearly marked here at 2388. So it looks like it's approaching, this is silver, so it looks like it's approaching that level at 23.88. Again, this is a 4-hour chart, so it's a short-term trade should you decide to even bother. And then we can sell it right there if it touches the red line, and then put our stop at the blue line. Right now it does look like it wants to go lower, again because dollar is actually going higher, and since silver and gold are inversely related to dollar, it makes sense. So this is DXY dollar index. You can see it broke out. It is now in an uptrend on the 4-hour chart. Silver is in a downtrend on the 4-hour chart, and we'll see if this is going to be an opportunity to sell it. All right, and let's finally look at various couple of cryptos. I'm going to look at Bitcoin and Ethereum. So congratulations, this is 53% gain, 54% gain almost. So latest opportunity to enter was a while back again. It was way back here in May. In fact, I bought myself, but I got stopped out a few weeks later. So if you were lucky and didn't get stopped out, and I should have followed my own system. My system says buy and put your stop at the blue line. But for some reason I didn't. I don't know why. Sometimes I beat myself up. But this is the life, and we need to deal with it. If I was to enter, I was actually entering back here on the 11th of May. I bought it. I should have put my stop at the blue line and just trailed it higher while taking profits. So if you did what I told you, and you should be in great shape right now, because Bitcoin is at 52-week highs, and it looks really good. I mean, we could see a pullback, but overall it's beautiful. I think it could easily continue higher. I do have Ethereum. I bought Ethereum, so a few opportunities actually. I just gonna highlight one. So you can see a low below the blue line here in late September. I went ahead and I just bought it there at 344.84. So we need a low below the blue, close above the blue. Then a few more opportunities, several days later, and then we saw a target. So my target is not that far, and I usually use the indicator called ATR, average true range. So there it is on the bottom. You can it's a freely available indicator. You don't need to pay for it. And then what I usually say is two average true ranges. So average true range is how much on average the stock moves. We don't know if it's going to be moving up or down, but it moves about that much. And in this case, it moved about $29. So we're going to put two ATRs as targets. So it's about, let me see, like right there. So it was, let me see, when I entered it was like 28. Yeah, so that's about right, about 1.5 to 2 ATRs. I went ahead and I sold half here, I sold quarter rather. The taking of profits, I usually sell a quarter, maybe a half or a third at my target. So this does several things. So number one is it improves my mood. And psychology of trading is important, obviously. So we are taking profits, meaning that we are in good shape. And then once I have profits, I advance my stop to, in this case, I advance to the blue line because, or to my entry. So my entry is like right there, basically by the blue line. So right now, if the price drops towards my entry, it will get stopped out. However, if or when, see how the blue line moved up? So I would have been trailing at it. And there were several opportunities back. You can see nice breakouts here. In May, was a huge move. It's like 100% move actually for Ethereum. Yeah, 120% move. So if you were able to get in back here, then big congratulations to you as well. So this is what I'm waiting for. Let's see if it makes a new high, then the blue line will move up and we will advance our stop. Okay, that's it for this week's recap. It's getting a bit long. Head over to MasterChartsTrading.com. You can also go to everyonecantrade.com. Click on products. I have 3 different products. I have a basic newsletter, which is covers ETFs, and it also covers very common stocks. Overall, about 100 tickers. I usually look at about 100 tickers, 100 stocks or so. If you want the indicators, trading indicators, these indicators, the green, blue, red, and yellow line, then head over and make a purchase here, and I will open the door for you. It's $29.95 per month. I think it's a steal. You can, I have clients telling me, I made money back at one trade, and he made money back for a year ahead. So let's say he bought this ultimate bundle at $50 per month. He made $600 on one trade, and you can have many trades, obviously. So very useful. So ultimate bundle now includes a couple of extras that are not included in the basic newsletter. So the forex, things like forex, like USD, JPY, for example, we can trade that as well on any time frame. Pretty much you can trade it on 1 minute. If you want to trade it on 1 minute, that's fine. For example, here's an opportunity, and you would have made money already where I'm hovering. But also it includes the stock screener. So this is a new thing we have where we can screen for stocks that are closing above the blue line. For example, let me see. FedEx, for example, that was a great recent opportunity trade right there where I'm hovering. 8th of June. This is all I need to know. The stock was trading below the yellow line, and it broke out above the blue line, and it went to like 100% almost, 96% gain. So congratulations again. So those are the indicators. And then finally I have a new thing. So the ultimate bundle includes the stock speculator newsletter, and here you will find really far out stocks that nobody really knows about, but one of them I keep showing is this one. It's NIO. Again, back in May of this year I knew nothing about it, but it closed above the blue line, so that's all I did. So I bought calls, and you can see that overall this transaction was 403% profit, even though I had three profit targets and finally closed it. So overall, just beautiful trade, and you can see it continued higher. There's an opportunity on 17th of July. It went up to it's still going up. It's overvalued, obviously, and it just looks overextended. But, who am I to say that it's overvalued? I'm only looking at these numbers, at the chart, and this is what I'm looking for. I'm looking for nice tight pattern, for example. So this is for the stock speculator newsletter, tight pattern and a huge breakout, hopefully. All right, that's it for this week's recap. Let me know if you have any questions. Thanks for watching. Have another great trading week. Bye-bye.